Now let us discuss set off and carry forward of losses. Don't underestimate this chapter. In previous attempt, 6 marks question is asked from set off and carry forward of losses. Hardly it will take less than 15 minutes to revise this chapter. So there are small chapters. Content is very low, but if a question comes, weightage is very high. So don't ignore small chapters, go through the small chapters. As it takes less time to prepare them, if a question comes, you will get more marks. It's like a strategy to prepare less and go get more marks. Okay. Now, you all know, like there is intra-head set-off. Intra-head set-off is also called as inter-source adjustment. Intra-head set-off is also called as interset adjustment, intersource adjustment. What do you mean by intra-head set-off? Set-off within the same head of income. Within one head of income, there can be multiple sources of income, right? For example, I have 4 houses. House 1, house 2, house 3, house 4. So I have 4 sources of income, and all sources falls under the head income from house property. Now loss from house property 1 I can set off against income from house property 2. That means what? If I have done set off within the same head of income, then we call it as intra-head set off or inter-source adjustment. Is it clear? Next, inter-head set off. If set off of losses is done with another head of income, that means loss from one head is set off against income from another head, we call it as interhead set off. For example, loss from house property is there, that was set off against income from PGBP. House property head is different, PGBP head is different. If loss from house property, if I can set off against income from PGBP, we call it as interhead set off. Is it clear? After doing intrahead set off and after doing interhead set off, still if there is any balance loss, that balance loss we will carry it forward to subsequent years. So did you understand what intrahead, interhead and carry forward means? Intrahead means set off within the same head of income. It is also called as intersource adjustment. Interhead means what? Set off of loss from one head with income of another head of income. We call it as interhead set off. After doing intrahead set off and interhead set off, still if there is any loss, that will be carried forward to subsequent years. Is it clear? Now, first let us see loss from house property. My dear students, please remember, loss from house property is eligible for intra-head set off. That means within the head house property you can do set off like anything. That means loss from one house property you can set off against income from another house property. But loss from house property is eligible for inter-head set off only under optional tax rates. If SSE is paying taxes under default tax rates, loss from house property is not eligible for inter-head set off. Now, so we can say loss from house property under default tax rates, no inter-head set off. Loss from house property under optional tax rates. Is it eligible for interhead set off? Yes, it is eligible for interhead set off. But maximum allowed is 2 lakhs. It is eligible for interhead set off, but maximum interhead set off allowed is 2 lakhs except winnings. That means you cannot set off loss from house property against winnings from betting, gambling, horse races, crossword puzzles and all. Okay, so loss from house property cannot be set off against section 115BB income. There is no restriction for intra-head set off. Loss from house property can be set off against income from house property. Restriction is there only for inter-head set off. If SSE is paying taxes under default tax rates, loss from house property is not eligible for inter-head set off. If SSE is paying taxes under optional tax rates, means loss from house property is eligible for inter-head set off maximum up to 2 lakhs. But loss from house property cannot be set off against winnings under section 115BB. Is it clear? Sir, loss from house property, intra-head set-off done under optional tax rates, inter-head set-off also done up to 2 lakhs. Still, balance loss from house property is there that will be carried forward to subsequent years. Sir, for how many years it will be carried forward? It will be carried forward for 8 assessment years. In subsequent years, loss from house property is eligible only for intra-head set-off. That means in subsequent years, you cannot do inter-head set-off for loss from house property. Is it clear? Maximum how many years it will be carried forward? 8 years. In subsequent years also, loss from house property can be set off only against income from house property. Is it clear? Good. Next. Business loss we will see. Long-term capital loss. I call long-term capital loss as identical loss. What do you mean by identical loss? That type of loss can be set off only against that type of income. Okay, so long-term capital loss can be set off only against long-term capital gain. It cannot be set off against any other income. So whether long-term capital loss is eligible for intra-head set-off? Yes, it is eligible for intra-head set-off, but it can be set off only against long-term capital gain. It cannot be set off against short-term capital gain. Long-term capital loss can be set off against long-term capital gain, but it cannot be set off against short-term capital gain. Is it clear? Now, sir, after I set off long-term capital loss with long-term capital gain in current previous year, still balance long-term capital loss is there. That will be carried forward to subsequent years. For how many years it will be carried forward? 8 years. In subsequent years, long-term capital loss can be set off only against long-term capital gain. Is it clear? Good. Next, short-term capital loss. Short-term capital loss is eligible for intra-head set-off. Short-term capital loss can be set off against both short-term capital gain as well as long-term capital gain. Is it clear? Short-term capital loss is eligible for set-off both against short-term capital gain as well as under long-term capital gain. Capital gains are not eligible for inter-head set-off. Capital loss is eligible for only intra-head set-off. It is not eligible for inter-head set-off. Still, if there is balance long-term capital loss or short-term capital loss, that will be carried forward to subsequent years. For how many years it will be carried forward? For 8 assessment years it will be carried forward. Even in subsequent years also, long-term capital loss identical can be set off only against long-term capital gain. Even in subsequent years also, short-term capital loss can be set off against both long-term capital gain and short-term capital gain. In subsequent years also, capital losses are not eligible for inter-head set-off. Is it clear? Did you understand? Next. Loss from owning and maintaining race horses. So if there is any loss from owning and maintaining race horses, such loss can be set off only against such type of income. Identical. Loss from owning and maintaining race horses can be set off only against income from owning and maintaining race horses. Is it eligible for intra-head set off? Yes, only with income from owning and maintaining race horses. Against other incomes of other sources, it is not eligible for set off. It is also not eligible for inter-head set off. Sir, I got loss from owning and maintaining resources. I had set it off with income from owning and maintaining resources. Still, balance loss is there from owning and maintaining resources. That will be carried forward to subsequent years. For how many years it will be carried forward? Careful, 4 years it will be carried forward. When I say identical, even in subsequent years also, that type of loss can be set off only against that type of income. That means even in subsequent years also, loss from owning and maintaining resources can be set off only against income from owning and maintaining resources. Casual losses. Section 115 BB losses are there. You lost in betting. That loss is dead loss. That loss cannot be set off against any income. So whatever the losses from betting, gambling, okay, crossword puzzles, horse races are there, those losses are dead losses. Those losses cannot be set off against any income. The government don't want to encourage them. That's why they were made as dead losses. Other losses, let's say I am earning royalty income. but my royalty expenditure is more than royalty revenue. In such a case, there is loss from royalty. Loss from royalty is taxable under other sources. So if there are other losses under income from other sources, loss from subletting, loss from royalty, other losses are eligible for intra-head set-off as well as inter-head set-off, but other losses cannot be carried forward to subsequent years. Is it clear? Are you able to understand? Now I have to explain business losses. I think today in morning class only I have told specified business loss can be set off only against specified business profits. That too only under optional tax rates. Because if SSC is paying taxes under default tax rates, deduction under section 35 AD is not allowed. Correct? Do you remember specified business deduction is not available if SSE is paying taxes under section 115 BAA, BAB, BAC, BAD, BAE? Do you remember? That's why like specified business loss can be set off only against specified business profits only under optional tax rates. Specified business losses are also identical losses. That type of losses can be set off only against that type of profits. Sir, I made specified business loss set off against specified business profits. Still there is balance specified business loss that will be carried forward to subsequent years. It is not eligible for interhead set off. For how many years it will be carried forward, sir? It will be carried forward for unlimited period. Are you able to understand? Next, speculative business loss. So if there is any speculative business, in speculative business I got loss. Speculative business loss is also identical loss. That type of loss can be set off only against that type of income. Speculative business loss will be set off against speculative business profits. After setting off, still there is balance speculative business loss. It is not eligible for interhead set off. That will be carried forward to subsequent years. For how many years it will be carried forward? 4 years. So speculative business loss, loss from owning and maintaining resources. These two losses can be carried forward only for 4 years. Even in subsequent years also, speculative business loss can be set off only against speculative business profits. Is it clear? Next, non-speculative business loss. Non-speculative business loss. Non-speculative business loss can be set off against speculative business profits as well as non-speculative business profits. Even after doing set off against speculative business profits and non-speculative business profits, if there is balance non-speculative business loss, that is eligible for interhead set off. That means balance non-speculative business loss can be set off against income from house property, but it cannot be set off against income from salaries. It can be set off against capital gains. It can be set off against other sources, but it cannot be set off against section 115 BB income. It cannot be set off against winnings. Is it clear? After doing interhead set off, still non-speculative business loss is there that will be carried forward to subsequent years. For how many years it will be carried forward? It will be carried forward for 8 assessment years. Is it clear? Next, unabsorbed depreciation, unabsorbed capital expenditure on scientific research, unabsorbed family planning expenditure. These three benefits are available only under optional tax rates, because like under default tax rates there is like additional depreciation is not allowed. Under default tax rates, donations given to approved scientific research association, approved university college, those are also not allowed as deduction. So I'm sorry, wait, non-speculative business loss can be set off against speculative business profits as well as non-speculative business profits. Still there is balance non-speculative business loss that is eligible for interhead set off. After doing interhead set off, still if there is balance non-speculative business loss, that will be carried forward for 8 assessment years. Even in subsequent years also, non-speculative business loss is eligible only for intra-head set-off. It is not eligible for inter-head set-off. Unabsorbed depreciation, unabsorbed capital expenditure on scientific research, unabsorbed family planning expenditure. These three expenses, like, they are eligible for intra-head set-off, they are eligible for inter-head set-off except salary and winnings. Otherwise, they will be carried forward to subsequent years. Even in subsequent years also, these three are eligible for intra-head set-off as well as inter-head set-off. Are you able to understand? So, generally in subsequent years, only intra-head set-off is possible. But in case of unabsorbed depreciation, unabsorbed capital expenditure on scientific research, unabsorbed family planning expenditure, for these three expenses, even in subsequent years also, they are eligible for inter-head set-off. Is it clear? So this is the concept. Now listen to me. Under default tax rates, additional depreciation is not allowed, right? So in earlier years, if there is brought forward unabsorbed additional depreciation, that is not allowed to be set off, that will be added back to the block. I think this concept yesterday I have explained in depreciation, last point. Similarly, if there is any loss with regard to section 35 AD, in current previous year I chose default tax rates. From earlier years, brought forward specified business loss has come, that is not eligible for set off. That means if SSE is paying taxes under default tax rates, some brought forward losses and brought forward deductions are not allowed. I will give you the list, write down. We have given notes, right? You can write it down there. Following deductions or write down like this: following brought forward losses or depreciation is not allowed to set off against any income if SSE is paying taxes under default tax rates. If SSE is paying taxes under default tax rates. First, brought forward loss from self-occupied property. Brought forward loss from self-occupied property. In earlier years, there is loss from self-occupied property 1,70,000 rupees. In current previous year, you chose default tax rates. That's it. 1,70,000 brought forward self-occupied property loss, it will lapse. Okay, you cannot set off against any income in current previous year as you are choosing default tax rates. That means the moment you choose default tax rates, even though you are having certain losses in your basket, okay, those losses you cannot set off against any income. Simply those losses you should forget, they will be lapsed irrespective of 8 years limit or 4 years limit. Okay, next, brought forward loss under section 35 AD. Brought forward loss under section 35 AD. That means from earlier years there is specified business loss. But in current previous year, you chose default tax rates. The moment you chose default tax rates, you cannot claim deduction under section 35 AD. So whatever the brought forward specified business loss is there, that is dead loss, that is not eligible to set off against any income in current previous year. Is it clear? Next. Unabsorbed additional depreciation. I already told you yesterday. From last year, unabsorbed additional depreciation came into current previous year. In current previous year, if you are choosing default tax rates, you cannot set off additional depreciation. So, but for this, relaxation is given. What is relaxation? Relaxation is also available for financial year 23-24. For 24-25, relaxation is not available. Relaxation is unabsorbed additional depreciation will be added back to the cost of the asset. Is it clear? Now, let us see these charts. Set off and carry forward and set off of losses under default tax regime. Under default tax regime, whether intra-head set off is allowed? Yes, intra-head set off is allowed, but there are some restrictions. Loss from speculative business can be set off only against speculative business profits. That means speculative business, non-speculative business, both are taxable under the head PGBP only. But speculative business cannot be set off against non-speculative business profits. Is it clear? Next, long-term capital loss. Long-term long-term capital gain, short-term capital gain. Both are taxable under the head capital gains only. But long-term capital loss cannot be set off against short-term capital gain. Is it clear? Next. Loss from activity of owning and maintaining racehorses. Income from royalty, income from subletting, income from owning and maintaining racehorses, all are taxable under other sources. But loss from owning and maintaining racehorses cannot be set off against income from subletting or income from royalty. Even though they are under the same head, loss from owning and maintaining racehorses can be set off only against income from owning and maintaining racehorses. Is it clear? Next. Interhead set off. Whether interhead set off is available? Yes, interhead set off is available under default tax rates. But loss from house property cannot be set off against other heads of income. See, this is the content we have already discussed, but this is the summary chart. Under default tax rates, whether interhead set off is allowed. Yes, interhead set off is allowed except house property. That means loss from house property is not eligible for interhead set off under default tax rates, except loss under the head capital gains. Capital loss is not eligible for interhead set off. Speculative business loss not eligible for interhead set off. Specified business loss not eligible for interhead set off. Loss from owning and maintaining resources not eligible for interhead set off. Loss from house property, like as it is not eligible for interhead set off, it will be carry forwarded to subsequent years. How many years it will be carry forwarded? 8 assessment years it will be carry forwarded. Okay. Carry forward and set off of unabsorbed losses. Unabsorbed business loss will be carried forwarded for 8 years. Unabsorbed speculative business loss can be carried forwarded for 4 assessment years. Long-term capital loss 8 years, short-term capital loss 8 years. And unabsorbed loss from owning and maintaining resources, it can be carried forwarded for 4 assessment years. Remember, here loss from house property was not given. In case of self-occupied property, loss from house property is not available under default tax rates, because in case of self-occupied property, whatever the interest on borrowed capital 2 lakhs or 30,000 is there, even that is also not available under default tax rates, as you cannot claim interest on borrowed capital for self-occupied property under the head income from house property. There will be no loss from self-occupied property under default tax rates. However, if there is loss from let out property, that will be carried forward for next 8 assessment years, but it is not eligible for interhead set-off. Is it clear? Optional tax rates. Under optional tax rates, intra-head set-off is allowed. Within the same head, you can do the set-off. But loss from speculative business can be set off, like if there is speculative business loss, that can be set off only against speculative business profits, otherwise it will be directly carried forward to subsequent years. Next, specified business loss. Specified business loss can be set off only against specified business profits, otherwise it will be carried forward to subsequent years, not eligible for interhead set off. Loss, capital loss also, long-term capital loss can be set off only against long-term capital gains. It is not eligible to set off against short-term capital gains. Is it clear? So, like you can go through this chart once you understand this chart. Okay, if you understand initial chart, then subsequent charts will be very easy to you. Now, note points. Loss return. Loss from house property, unabsorbed expenses. Even though you do not file income tax return, still they can be carried forward to subsequent years. But PGBP loss, capital loss, loss from owning and maintaining resources, if you want to carry forward these three losses, income tax return is required to be filed. Such income tax return is required to be filed on or before the due date. Is it clear? Are you able to understand? Only if ITR is filed, and if such ITR is filed within the due date, then only these three losses can be carried forward to subsequent years. Next, casual income. Casual income means what? 115 BB income. Okay, against casual income you cannot set off any losses. Against like winnings, section 115 BB income, you cannot set off any losses. I have only two incomes. Okay, one is loss under house property 50,000, another one is betting income 80 lakhs. Now can I set off 50,000 against 80 lakhs? I cannot set off. Okay, against 115 BB income you cannot set off any losses. Next, loss can be set off against income clubbed in the hands of the SSC. Minor income is clubbed in the hands of parents. Whatever the clubbed income is there, against clubbed income you can do set off of losses. For example, SSC is running business. In business there is loss of 2 lakhs. Okay, but his son has 8 lakh rupees income from fixed deposit. Now son's income will be clubbed in the hands of parents. Let's say under default tax rates, 1500 exemption is also not available. 8 lakhs will be clubbed in the hands of parents. From 8 lakh rupees, you can, like, father is having 2 lakh rupees business loss, right? This 2 lakh rupees business loss can be set off against 8 lakh rupees clubbed income. Are you able to understand? That means what? Against clubbed income, you can do set off of losses. Under section 115 BAC, loss from house property is not eligible for interhead set off. Then this point is important. Any loss incurred in the year in which business was discontinued by the SSC shall be allowed to be set off against the deemed profits, and only balance, if any, shall be taxed under section 41(5). What do you mean by this? For example, Kaushik started business. He started business in previous year 1920. There is loss of 3 lakhs. He told himself what's there in it. In first year, every business there will be loss. He opened YouTube, listened to 2-3 motivation videos, and he started doing business once again. In 2021, there is loss of 5 lakhs. Then he wrote, he read one quote, failures are stepping stones of success, and he continued the business. In previous year 21-22, there is loss of 7 lakhs. That's it, Katam. Okay, he closed the business. Then he sat and uh, thought about the reasons why he is getting continuously losses. He is selling goods on credit basis to Sumed. Sumed is not paying money to Kaushik. Okay, that means what, there are bad debts. Because of bad debts, he ran into losses. This is the scenario. Normally, business loss can be carried forwarded for how many years? Business loss can be carried forwarded for 8 assessment years, correct? In previous year, let's say Sumit and Kaushik both got separated. Okay, the moment there are bad debts, Sumit escaped. Okay, Kaushik could not find Sumit, because if Kaushik finds Sumit, he will start beating him. That's why. In previous year, 35-36, suddenly Kaushik saw Sumit. That's it. In Kaushik, Balai Babu has come. He started beating Sumit. So Sumit, frightened by it, whatever the bad debts of Sumit are there, 10 lakh rupees, he repaid it back to Kaushik. Now, so there is recovery of bad debts 10 lakh rupees in 35-36. Generally, recovery of bad debts are taxable under the head PGBP even though business is discontinued. But loss, how many years it can be carried forward? It can be carried forward for 8 years. 22-23, 23-24, 24-25, 25-26, 26-27, 27-28, 28-29, 29-30. Okay. Even after 8 years also, still discontinued year business loss can be set off against recovery of bad debts, and only balance 3 lakh rupees bad debts are taxable under the head PGBP. Is it clear? So whatever the discontinued year business loss is there, that can be carried forward even after 8 assessment years and can be set off only against recovery of bad debts. Rest all points you read, you will understand automatically. There is not much technicality. So with this we will conclude set off of losses. See, no difference between long-term capital gain under section 112 and 112A. What do you mean by this? Let's say you have business loss 7 lakhs. There is long-term capital gain under section 112, 3 lakhs, 112A, 1.8 lakhs. Now it is up to you whether you will set off against 112 first or 112A first. That means order of priority to do interhead set off, it is up to the benefit of the SSC. Is it clear? Next. There is exempted income. Agricultural income is exempted income. In agriculture there is loss. That loss is dead loss. That loss you cannot set off against any head of income. In agriculture there is loss. Can you set off that loss against income from house property? No. Next, order is very important. First you should do intra-head set off only. Then only if there is balance loss, you should do inter-head set off. Then only if there is balance, you should carry forward it to subsequent years. For example, loss from one house is there. There is also income from another house. Without doing intra-head set off, you cannot directly carry forward it to subsequent years. That means order is to be followed very strictly. Is it clear? Next. Brought forward losses shall be set off in the immediately succeeding years. Sir, this year business loss is there. Okay, there is no other income. So this will be carried forward to 8 years, right? Can I choose future 8 years whenever I want? No. This is 24-25, right? Immediately after 24-25, whatever the next 8 years are there, immediately next 8 years, within those immediately next 8 years, I have to set off the loss. Otherwise, that will lapse. That means carry forward period is to be calculated continuously and not on random basis. Is it clear? Next, if there is loss from AOP, loss of AOP cannot be carried forwarded by individual members. Are you able to understand? Partnership form loss is there. Partnership form loss, individual partners cannot set off against their income. Okay, body of individuals are there. So they are treated as different persons, right? AOP loss, BOI loss can be set off only against by AOP and BOI. Individual members cannot set off loss of AOP or BOI. Is it clear? Next. Set off is not optional, but it is compulsory. Partial set off is also not permissible, even if it is beneficial to the SSE when full loss can be set off. I told you now, sir, 2 lakh rupees house property loss is there. 1 lakh I will set off against another income from house property. Balance 1 lakh I will directly carry forward to subsequent years. He will not accept. First, you should completely finish intra-head set off. Then if there is still balance loss, you should completely finish inter-head set off. Then if there is any balance loss, that will be carried forward to subsequent years. Is it clear? Next. A company whose principal business is that of trading in shares has been excluded from purview of explanation to section 73. Consequently, such activity shall not be regarded as speculative activity, and any loss arising therefrom shall be treated as normal business loss and not non-speculation loss. See, you know speculation business, right? Speculation business, best example is intraday trading. In case of intraday trading, in the same day you will buy share, in the same day you will sell the share. Okay, if that is the case, that is speculative business. My main business is not to do intraday trading, but I will regularly purchase long-term shares and long-term shares I will sell. In this case, like if my business is not intraday trading, then even though regularly if I purchase and sell shares, that business is considered as non-speculative business only. It is not to be treated as speculative business. Like I purchased Reliance shares, I held it for 5 days, then I sold. Then I purchased Adani shares, I held it for 3 days, I sold. I am not doing intraday trading. Within the same day I am not doing the transaction. Okay, still on a regular basis my business is trading of shares. My business will be considered as non-speculative business. It is not to be considered as speculative business. To call it as a speculative business, like I should trade on speculation. Okay, see, within the same day you purchase and sell share means what? Like it is based on speculation, based on buying and selling, it is being determined. Okay, other than intraday trading, even though I do my business is buying and selling of shares, it is not to be considered as speculative business. It is to be considered as non-speculative business only. Okay. Third point is interlinked with 17th point. You can see in third point what it was said, business loss can be carried forward and set off even after 8 years when only against section 41 income specified under section 41.1 to 41.4. It's nothing but discontinued year business loss can be carried forward even after 8 years also, but can be set off only against deemed profits, recovery of bad debts. Is it clear? So that's it. Majority of the points are discussed. Order of priority. I told you, if there is income in current previous year, that income we should first set off against current year depreciation. Second priority should be given to brought forward business loss. Third priority should be given to unabsorbed depreciation, unabsorbed capital expenditure on scientific research, unabsorbed family planning expenditure. Okay, this is the order of priority. So that's all about set off of losses. Don't ignore important chapter. I wish you all the best.